from the NYMEX, this is Futures Now. Welcome to the program. I'm Jackie DeAngelis. Great to be back with you. I was out sick a little bit earlier this week, but glad to be back, and certainly to have Jim and Jeff as my wingmen today to talk through all the issues with. Gentlemen, we have a lot to do. We're going to talk about bonds. We're going to talk about the crude oil trade ahead of the OPEC meeting with Dennis Gartman. We also are going to be talking about the market. But again, let's start with the bond trade, because a lot of people are asking if this sell-off is just getting started, if these yields are going to continue to climb higher. Jeff Kilberg, what do you think?
Well, we have seen tremendous velocity, no doubt about that. Monday, the yield was about 210 in the 10-year, Jackie. And when you see it go up to about 240, that type of speed does bother people, right? No doubt about it. But let's be real here. This is the reflation trade. We should welcome these higher yields. Deflation fears are going to the side a little bit on this type of movement, but I don't think we get above that big technical hurdle of 242.
I love starting right when I disagree with Jeff. It makes the show, it sets a good
Let's
pace.
start off on the right note, gentlemen.
This is not the reflation trade. What this trade is...
Potentially it is.
It's a continuation of something that happened in Europe. The Bund 10-year got to about 0%, and then all of a sudden everybody and their mother realized that they were too long.
Don't talk about my mother,
There's been
please.
a dislocation, and they're selling Bunds. Bunds are in a bear market. We follow that because of the relative value trade. If the Bunds are up to 1%, there's the spread that we should be, and that spread is, should it be 240? Should it be 250?
Well, I don't think that argument works, Jackie, because the correlation for the Bund and the 10-year note has been very, very uncorrelated in the last 12 months.
I don't agree. I think that it's what's pulling us in the direction it is right now. No, well, maybe there's some portion of it that's reflation. Yes.
Jim, and I'll pose the question to you, because a lot of people stateside are wondering what this data sort of and the action that we're seeing in the markets means for the broader markets in terms of what's happening with bonds right now. And Jeff just brought up this point that really the market should be reading this as good news. It means that, you know, things are potentially getting better, etc. But the market is not reading it that way. So, Jim, having said that, where do you think we go from here?
I think, ultimately, I think rates are heading higher. And I think it's, like I said before, the predominantly because of relative value with the rest of the world. I don't think there's inflation yet, but it wouldn't be the craziest thing for this move to begin, and then it turns out that there was a little bit of inflation. Remember CPI data 2 weeks ago looked maybe that there was a little bit. I don't see it yet. I still think rates are going higher.
I don't see inflation.
Yeah, I think rates are going to 250-ish.
But I think they're going to be lower for longer, Jackie. This conversation where this ZIRP, the zero interest rate policy, it's almost 2016. We're closer to 2016 than 2015, right?
Amen.
So it's been a long time. But I think Yellen's going to be very prudent. It's going to be a September raise, but they're going to be very, very adamant that they're going to do it once and sit back and watch the data. Tomorrow's a big number. The bond market's really looking at tomorrow.
Yes.
Jim, let's talk about levels for the trade. I'm assuming you're a seller here.
Okay. Yes, and Jeff just mentioned something about tomorrow's number. If you don't take that into consideration, pare back your sizes, you're doing yourself a disservice, because things are going to get volatile tomorrow.
Yeah.
That being said, I do think, now we're trading the SEP 10-year note now has become the front contract. Yep. I think if you can get 126.02s off, you sell at that spot with a 125.06 target. A stop would be 126.18. This trade just continues with my opinion that long-end rates are going higher.
Well, look, I don't love this trade, but at 232, the yield he's going to get into this play, he's got 10 basis points to play, Jackie. So 242, that's the critical number I'm looking at. So I guess from that perspective, I'm okay with the Urios trade.
All right, Jim, last word?
No, I'm glad he's okay with it. I'm shocked. How's that? That's my last word.
No, this is futures now, Jackie, and this is a short-term trade before a very volatile number, so I'm okay with it.
Right.
I'm not condoning it. I'm just okay with it.
Okay.
Let's go ahead and get the bottom line on this trade before they kill each other and move on to talk about crude oil. The bottom line in the 10-year note trade is that Jim is selling. Jim is selling. Jeff's okay with it. We're selling at 126.02, targeting a move to 125.06. Since each tick is worth $31.25, risking $500 to make $875 here.